Job, thank you for making time. Let's begin by picking your mind on some of the budgetary allocations to the manufacturing sector. And the first would be the 18.3 billion allocated to manufacturing and local industry. What do you make of this proposed allocation to the sector?
Thank you so much. Indeed, we welcome the allocation to the sector of 18.3 billion Kenya shillings, whereby about 3.5 billion is going to the SEZs in the Kenaine, the river, and also we have 8.43 million Kenya shillings going to the river tax. So this is towards the industrialization in the country, or coming up with the right infrastructure so that then the policies that we've been advocating for can be implemented in this. So without this allocation, then we will not see the manufacturing sector getting to the 15% GDP contribution by the time it is stipulated.
To what end will this allocation go into benefiting the sector?
It's going to go a long way in ensuring that there are various policies that have been taken care of. If at all we're talking about industrialization policy, we're looking at value addition in some of these SEZs or even in some of the infrastructural development that are coming up. Because without the enablers being taken care of, then we will not see industrialization taking place. We're looking at Build Kenya being embedded through this industrialization. We are looking at the fight against illicit trade being enhanced, the allocations that have been made. We are looking at competition issues being more seriously, and especially when we're talking about the trade remedies issues between what we are locally manufactured and fairly being imported into the country. The other angle to look into is the trade policy. Looking at the implementation of National Export Development and Promotion Strategy. Without the implementation of these, we will not see the growth of the wealth for the country, because an exporting country does not grow its wealth by trading internally or within its borders. So those are some areas that we know that they're going to benefit out of this allocation.
Also, a 13.1 billion allocation to offset pending bills. Now, we know pending bills has been an issue not just in the manufacturing sector, but different sectors. But to what end will this go into benefiting the sector?
13.1 billion is just tip of the iceberg, because the pending bills are amounting into billions of Kenya shillings. We're talking of about 300 billion Kenya shillings. So feeling that it's good because it's a good start for the government, and under the stimulus package and also the Balog Strategy, this one had been earmarked, but we are looking at how this one can be improved further by certification of the bills that have been presented to the private sector, so that we can increase the liquidity in the economy.
These allocations enough?
No, they were not enough.
Could have been done.
Looking at because 13.1 billion allocation, we are talking of about 0.5% allocation of the pending bills. If you look at the pending bills from the county government and from the national government, so we are looking at a better performance as far as the pending bill is concerned. If at all we would have close to 200 billion or 300 billion cash shillings being allocated for these, so that we can clear the outstanding balances.
Now, I want us to talk about taxes, and the finance bill proposes minimum tax to facilitate smooth transition once the economy reopens after COVID-19. How will this measure go into benefiting that smooth transitions once we reopen?
Minimum tax on gross turnover of 1% is a bit punitive, because we are looking at even loss-making companies being told to pay or being directed to pay 1% of their gross turnover. Because if you look at the books of account, the gross turnover is when you're talking about now the sales revenues. If the sales revenues and you have not considered the expenses that come with that business, then if you look at that P&L or profit and loss account, if it is at net loss, then you'll end up adding more expenses as far as taxation is concerned. We have long complained about the taxation regime in the country, and this is a discussion that we need to look into going forward. Rather than putting every other player into this bracket, we need to look at how we can have more compliance being instituted in our companies through KRA compliance program, rather than putting even loss-making companies into the bracket of paying taxation. This is going to be more hurting for those that are going to emerge from the COVID, or are going to march along the COVID pandemic going forward.
We almost come to a close. What are some of the tax measures that you would have liked to have seen being proposed in the budget statement as the Kenya Association of Manufacturers?
One of it is withholding VAT. At the moment is starting at 2%. So we are looking at how this one can be abolished, because with withholding VAT at 2%, it's just an information collection and mechanism for those who have traded within the nation, but not necessarily revenue generation. But you find that 2%, there's some amount that goes into VAT refund, and this affects the liquidity and the cash flow within the companies. And then we saw the VAT be reduced from 16% to 14%. Our interest is to see how this one can get further down even to 7%, because if you look at the reduction on cost over the products that are being traded, more persons will be able or more citizens will be able to tap into supplies within the country, rather than to get to the supplies within the country. And this is going to open up those who are in the VAT to the government. By doing so, that means at 7%, you'll have more be generated, as opposed to when it is at 14%. In fact, the survey report that we carried out on the go, it showed that this one has the least effect on the customers, on the manufacturers, as far as the VAT is concerned.
Job, in 30 seconds, because I have to wind up, what are those maybe top 3 gray areas that were not addressed in the budget statement altogether that you would have loved to see addressed, or you would have loved to see incorporated in the next budget statement?
One of it, we would like to see the reduction on the recurrent expenditure. In fact, the recurrent expenditure is starting at 1.82 trillion Kenyan shillings, out of a budget of about 2.79 trillion Kenyan shillings. So we would see the reduction of the recurrent expenditure. This is likely to improve the developmental expenditure, which was announced at about 633 Kenyan shillings. So the more we have current expenditure, the more you find that the development of the nation is lagging behind. And then we saw the fiscal deficit at 840 billion Kenyan shillings. That is for the fiscal year 2020-2021. How can we see the fiscal deficit getting to 3% of the GDP, as it is stipulated in the EAC macroeconomic convergence criteria? The third one, we would like to see the list of the locally manufactured goods being gazetted. This is a promise that we have had for the last 1 or 2 years. We would like to see how the import substitution strategy can be embedded in our value addition processes. So those are the 3 areas that we'd like to see happening very fast, so that at least we can see macroeconomically there is a restructuring of the economy, and also at the manufacturing level there is value addition that is happening at
Thank you very much. That's where we leave it.
Thank you so much.